Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to Wild or Wacky Wednesday. I'm Juliette Sarli.
And I'm Nadine Blaney. It's a pleasure to be here with you. Just keeping an eye on the Aussie and Kiwi dollars, taking a bit of a breather today. We do have a big data point here locally tomorrow around 11:30. That's jobs, but I am getting ahead of myself because, of course, we've got this day to digest with the CIBO Australia Index. Yeah, it was a bit wild and wacky, wasn't it?
Yeah, I think we've started to see this risk-off sentiment come through again when you look at US equity futures. So let's have a look at where our market finished the day's trade. We certainly started lower on the back of that weakness from Wall Street. Then we had a pretty good rally, particularly in the mid-session, but it's very much petered out towards the end of the day's trade, and the CIBO 200 down 0.4%. So again, I guess the caution, the fear coming in particularly ahead of the Fed.
Yeah, it's interesting though, because right now, US futures are mildly positive. And I just think it's worthwhile pointing out before we get too down on ourselves that week to date, we're up by about 0.5%. So far, so good. But of course, anything can really upset this apple cart, can't it?
2 more days to go. But let's get through what we saw today, and of course those Wednesday wobbles, and then we had this very interesting story about Richard White, the board review into allegations of improper behaviour by the founder and former CEO of WiseTech, and of course we know that the share price has dropped something like 40% since they came to light in October. There was a board review. Richard White has agreed with the board review. He did, of course, indicate it's a personal matter, but he says that, you know, he is the one that really has to help lead the culture, but he is staying at the firm.
Yeah, ASIC is calling in former WiseTech directors to provide some more evidence. So that is a big story when you consider just the meteoric rise of WiseTech. Some investors that I've spoken to say they want him to remain there, and then others say this just would never happen with any other company or in any other country. Leaving that to the one side, a bit of drama there. We've got the Fed, as you mentioned, firmly in focus, not expecting a cut to come through. However, their job definitely complicated by this so-called detox that the Treasury Secretary in the United States, and it appears as if the President, Donald Trump, are willing to put the U.S. economy through to achieve their end goals.
Yeah, absolutely. So all of those things will be in focus for the Fed at their 2-day meeting kicking off. And let's have a quick look. Of course, wrapping up, isn't it? Gosh, I'm a day behind myself. Let's have a look at what their tech stocks did today after WiseTech down by 2%. WiseTech, interestingly, did pop on the open, but yeah, closing lower, along with the other selling that you saw in tech, because of course US tech stocks tumbled overnight as well.
Well, we're going to be talking with our guest about, so-called US exceptionalism and if that day is over. But for now, a little bit of life there being seen in JB Hi-Fi and Wesfarmers as well, but not so for Lovisa, down by 3.4% to $24.31.
And a quick look as well at some of the mining players. BHP looking okay, up 0.2%. Rio Fortescue going the other way. South 32 up 0.6%, and of course Mineral Resources was in focus today, and that was one of the laggards, off by around 4%.
Yeah, that was the stock of the day. We'll get there in just a moment. Let's get you across some of the other stories out there. Myer says trading conditions remain challenging in the second half. Sales down 2.6% in the first 5 weeks.
Yeah, we touched on WiseTech there. Richard White admitting to not being fully transparent.
And Mineral Resources, another disruption on the Onslow Iron haul road. So that is number 6, crashing on its network, and not doing much for confidence in MinRes. And Capricorn Metals closing its remaining 55,000 ounces of gold hedging contract. So that settled via a bilateral transaction to issue Capricorn shares to Macquarie, and its share price fell by 4% today. Goodman Group raising an additional $5 million in a share purchase plan. So pennies compared to that $4 billion Insto share placement a little earlier on. Look, there's a lot of news just from, corporates, little smaller companies out there, but we might leave the corporate news for now and get to our guest in studio, Mark Gardner from MPC Markets.
Good afternoon.
Hey, Marky Mark. All right. Maybe a thought on that comment I made about American exceptionalism a little bit earlier on. I mean, I'm not the first person to say this, but there's definitely a change in tone from the U.S. to opportunities elsewhere. Where?
Yeah, I mean, look, US stocks are still well beyond previous records for price to book across the index. Still very expensive. There's been a lot of money flow in there over the last few years. I think where you can really see where the rally kind of started was when that deep-seek shock hit. People started to really dig down and have a little bit more of a closer look at Chinese tech. And they're not just crappy t-shirt manufacturers anymore. Like some of their Silicon Valley is coming out with a lot of things that are essentially better than the Americans as well. They're actually fairly cheap. The tech stocks over there, and obviously they've already been in the doldrums for the last 3 years. China or PBOC is committed to 5% GDP growth, and they'll do whatever it takes to get there. So, I think that Europe, I don't necessarily think is a decent switch. Europe always seems to find a way to clutch defeat from the jaws of victory, despite the defence sector doing quite well there. But China's actually, relatively cheap. They've sort of been through the economic slowdown, etc. And they've been very quiet on the tariff front, which says to me that they've pretty much got it under control. And probably had a fair bit more lead time to prepare for the likes of these wild policies from Trump. So, I think Jonathan's done a segment on the trade before where basically they control a number of industries. So tariffs is not going to really halt that control, to be brutally honest. So we're seeing good opportunities there. Going back to Europe as well, obviously with Trump essentially a little bit uncommitted to providing weapons, etc. We've seen obviously that Germany last night with their announcement. The European defence stocks are doing extraordinarily well.
So talk us through the actual, because you're looking at ETFs, I guess, in both these spaces.
Yeah, ETFs, just for the market uncertainty, the ETFs is the easier way to play it, I suppose, and a little bit more accessible way to play it, particularly if you've only got access to Australian or ASX listed stocks. So Defend, DFND, is the VanEck one. And look, it's obviously done very well since even February, or the end of February into March there. And there's a couple of really high quality companies. Base Systems is one that we've got as one of our high conviction recommendations at the moment, whereby basically their global tracking system for all of your allies. If you're an ally of America, every single ship and plane and everything has to have it. So you're basically forced to buy their product essentially. So and there's those European military contractors and infrastructure builders are basically obviously having to do things themselves and not just rely on the US anymore. So it's there's probably not a bad opportunity there. I think at the moment geopolitical uncertainty generally is going to come along with tariffs and uncertainty and trade wars. So and that's just increased with I believe the Houthis are back in the there was a ship sunk overnight, albeit an Iranian ship, and then Trump's talking to Putin, and even his party sort of backlashed on Trump's party. There was a Republican that came out last night and said he can't let Putin off the hook. Yeah. It's just an invitation for China to invade Taiwan. So, when you're having those sorts of conversations, things like gold and silver, like I wrote about yesterday in the guest view. So
just stop you there. So just the defence is DFND, that ETF, and then the iShares China Large Cap IZZ Asia Tech ETF Asia. So just so everybody listening can get those. And then, let's get to what you were saying about gold and silver, because that was a great piece yesterday. And if we're seeing gold ratchet higher and everyone's got these calls on gold, as you rightly put it, why not also look at silver?
Well, absolutely, and it's at 13-year highs at the moment. It missed by 8 cents last night from cracking a new 13-year high. It's got the added advantage of the increasing industrial demands now, is about probably 50% higher than what it was in recent times. But, I mean, obviously, gold is generally will grind higher. Silver will eventually play catch-up. Most analysts have got price targets between $38 to $50, somewhere in the 40s. They've got the analyst consensus out of the US, which is hundreds of different analysts, and we're currently sitting around the $35 mark. So there could be a bit of catch up there, and then obviously because gold and silver have been rallying, and we've had Trump stealing the headlines. I mean, copper's back at those was only about 15 cents a pound from record highs again as well. So and it's been one of those minerals that Trump's obviously prioritised. So that's where the likes of Newmont benefits from both, because it's got gold, can switch to copper very fast. The CEO's already outlined plans for that, and they've got an 18,000 tonne stockpile which won't be subject to tariffs. Yeah. So that, that's not even really being priced in at the moment because copper prices have been so bad for so long. So there is some good opportunities out there at the moment. It's just not the ones that were last year's best opportunities. So you've got to rejig your portfolio every now and then. The same thing doesn't work all the time. So it's best to have a look around.
Okay, so when you are looking at the Australian landscape, where are you seeing the opportunities for, I guess not just today, not just in the sell-off, we hear ResMed and CSL and the likes a lot, but what are you thinking in terms of thematics for the remainder of the year? What are you talking to your clients about?
We've just got a list of stocks that we really wanted to have on, which have been too expensive. I mean, Goodman Group's a great example. That thing was at $40, 4 or 5 weeks ago? It's $3 below where the cap raise price was. Super high quality company. $4 billion in data centers is going to be a great play over the course of the next the next 5 years. So, but it has been extraordinarily expensive for a long period of time. WiseTech for house view is around 80 is pretty good. We sort of got out when this controversy started, and we've just been adjusting our price incrementally down as the scandals unfolded. I'm personally not a fan. I wouldn't buy it, but for those who are happy with that governance and being putting your investment in the hands of a 70-year-old man as a key person doesn't really appeal to me. But for those who it does, they're looking very cheap. And WiseTech does have like 50% pullbacks every 20 odd months. So this is not, shareholders have been have been through this before.
Yeah. Just because we're going to run out of time at some point, I mean, we have to talk about the Fed, don't we? I mean, or is this one of those rare meetings where it's unlikely to cause any sort of big market reaction, given that there's this overhang, the bigger sort of picture conversation going on about the US tariffs and economy, et cetera?
I think it is a bit of a dead rubber in a way, but it's interesting that there's a lot of analysts in the US now saying that the Fed's losing control of monetary policy. I've never really seen an environment where the Fed's always been top dog, where analysts are questioning if they've got any control, to be honest. So, and Trump's willingness to he thinks he can walk a tightrope in a short, shallow recession. I think that's ridiculous talk, but but when you've got someone, it's a very counter reaction from any previous government. No one wants to ever push the country into recession, so it's very interesting times. So it'll be interesting to see what the commentary is to come out. I don't expect too much from the market wants rate cuts. If they don't get it, they'll or talk about it in their commentary. I think the market will probably ignore it a little bit for now and keep focusing on Trump.
Yeah, well, that's what he wants, doesn't he? All right, Mark, thank you. Mark Gardner from MPC Markets. All right, the stock of the day, as Nadine mentioned, was mineral resources.
MinRes. So I had Henry Jennings from Markets Today and Andrew Whiteland from DP Wealth Advisory. Here's what they had to say.
Mr. Shakespeare said, troubles come not but in single spies, but in battalions. And certainly these mineral resources does have battalions of troubles there at the moment. Not only is the iron ore price under a little bit of pressure, let's face it, it's held up above 100, so that's good, but lithium has not done an awful lot. They've also got a mountain of debt, governance issues with Chris Ellison, of course, being investigated still. And this Onslow Iron haulage road has caused them lots of problems, 6 trucks, and mainly it has been caused apparently by driver error rather than problems with the road. But they are spending quite a lot of money, $230 million at last count, on repairs.
From a governance point of view, that would have institutional investors concerned. And then on top of all that, you've got the operational piece that we were just talking about before. So I can think of lots of reasons not to be there. Also noting that Mr. Ellison also controls around 11% of the company. So that's having him on the register is just another complication. And despite the share price being down 64% so far this year, Nadine, it's a hold.
Not tempted by the big sell-off in MinRes, I should say, just yet.
All right, let's have a look at the leaders on a down day. Codan had a good
Yeah,
session.
no news. I checked because it's an interesting stock that does come up every once in a while. But yeah, I couldn't see anything associated with it. Deep yellow, though. We actually had Macquarie cutting its share price target by 5% to $1.90, but clearly not doing any damage there.
QBE Insurance also had a very good session. It was up by 4.3%. New Hope, of course, rallying on its results. And The View today, written by Sean Hickman, talking about that stock.
Oh, yeah. Okay, so that'll be interesting.
Yeah, and JB Hi-Fi, I'm pretty sure, had a broker upgrade.
Yeah, maybe.
Yes.
It's funny because I don't see anything, but...
Yes, for their dividends from JPMorgan.
nice.
They see $5 in special dividends. That was all coming to me, and a little voice in my ear called our producer Marius.
I love it. So that's what they're there for. Okay, Helia is down by about 8%, but it's trading without its dividend. So that's what we're always sort of on the lookout for at this time of the year. Interesting. Pinnacle, I guess, just had an uplift when we had a bit more risk on sentiment, and just giving a lot of that back today. Again, I can't see any news. And Nickel Industries off by 5.6%. It did have a feasibility study come through today, so there must have been some detail in there that the market did not like.
All right, let's have a look at the small end of town now. And Umegene had a good session, up by 14.5%. I always love seeing Alligator Energy up there, but quite a lot of those energy players lifted today.
Yeah, there must have been, sorry, I have not been keeping an eye on it, but there must have been something with the uranium price to see all of those uranium plays up today, including Deep Yellow. On the flip side, we have some of these. Oh yeah, Webjet. I saw a broker note come out on Webjet today, down by 13%. And Bhagwan Marine off by 8.6%. Not a company we talk about a lot.
No, let's have a look at what we are expecting tonight, including, of course, the Fed decision expected to remain on hold with that rate between 4.25% to 4.5%, and also EU CPI. So that's expected to have eased slightly.
Okay, and tomorrow, as I mentioned, we will be digesting any commentary coming from the US Fed, Jerome Powell specifically, but we also get a read, GDP read actually from New Zealand, and here we get the unemployment rate, really key for the RBA, along with a bunch of ex-divs.
Yeah, so Andrew will speak to Paul Brennan from Suncorp after that has just dropped, and then we'll also speak to Bjorn Jarvis from the ABS at the 3 p.m. hour about the overall stats.
That's great. And there were so many great interviews done today on AusBiz. If you're not in the habit of going to the website and catching up with what you may have missed in the evening, I encourage you to do so. And I love some of these headlines we've got there today. Spoke with Emmanuel Dat from Dat Capital. Intensifying demand for the stock. Get it?
That was one of
Tim?
mine.
I thought it might have been. And we also had a chat with Scuddy, if you remember him, and he's got the question, have we reached the bottom yet? There's so much information to get caught up with on ausbiz.com.au.
All right, let's have a look at where the market has finished. Down 0.4% there on the CBO 200. I think a similar loss coming through on the ASX 200. Yeah, 0.4%, 32 points, 7828. And as we mentioned, Helia and Clarity, the laggards today.
So we will look forward to seeing you. We are live from 9:45 tomorrow.
See you then.